Hey everybody, it's Mr. Lum, and today we're going to be learning about taxes. And more importantly, is we're going to be learning about a very specific type of tax called income tax. Now, income, if you remember, means the money that you earn from your job. And that can be a lot of different things. That could be from uh, your hourly wage, your salary, or piecework, which we talked about. Like piecework would be something like tree planting. You get paid by the tree, or or if you were a fruit picker, you get paid by the kilo of fruit. That is piecework. If you get commission, all that kind of stuff. Um, that is all different types of income, but the commonality is that you have to pay taxes. And there are two different types of income tax. There are federal income tax, and federal income tax is money that is deducted, and remember, deducted means taken away, money that is deducted from your income that goes to the Canadian government, so for all of Canada. And then there is provincial income tax, and that is money deducted from your income that goes to the provincial government so that they can spend stuff. So provincial government, if you're working in BC, that money goes to British Columbia. So those are our two different types of income tax. Now, why do we have two different types of income tax? Because we have two different types of government. The Canadian government is going to be servicing things like money will go towards military. Okay, it'll go to pay for all your elected officials, so like your prime minister and all your Congress and all that kind of stuff right there. Your provincial income tax is going to pay for different services like hospitals, um, things like that. Um, and these income taxes will go for other things like paying for roads, paying for infrastructure like telephone lines um, and water and sewer lines. All that kind of stuff are things that go for income tax. Now, if you make less than $12,069, you do not have to pay income tax. Today we're only going to be focusing on federal income tax. So this is how you calculate federal income tax. We have a tiered system where you pay on the first $47,000 you make, you pay 15%. And the second 47,000, and I'm rounding it here, so $47,629 on the second chunk of money you pay at a higher rate. You pay 20.5%, and then so on and so forth. And the more money you make, your taxes go up. Okay, now it must seem like a lot, like 33% of the money you make you have to pay in taxes. Yeah, but this person right here who is paying 33% isn't making $210,000. That is on the next chunk of money. Or sorry, so for example, if you're paying at this 26% right here, you are making, well, 47 plus another 47, which is roughly 95,000. And here you're only paying at this 26% if you are making over $95,000. Okay. So we're going to learn about how to calculate this stuff because it seems a little bit complex, but it's not. So in your guided notes, you should have one example right here, and it is if you earned $50,000 a year, we're going to calculate your taxes right now. So if you earned $50,000 a year, this means on the first $47,000, you are going to be paying 15%. So on the first $47,000. Now, even though this is the first $47,000, we need to pay taxes on all of our money that we make. Okay, so we made $50,000, but on the first $47,000, we pay at a 15%. So in order to calculate that, I convert this 15% into its decimal form, so in other words 0.15. And if you have a hard time doing this, just take the percentage and divide by 100. So 15 over 100 equals 0.15. That's how I convert 15% into my decimal form. So I then take my 0.15, I multiply that by the first $47,630, and you get this number. The provincial government gives you this, and it comes from right there. Okay. Now once I multiply these two things together, I get the number $7,144.50. This is the income tax. So we're going to save this number for a little bit. But again, that's for the first $47,630. We made $50,000. So there's a remainder. There's almost $2,500 remaining. So if I take, say, $50,000 and I subtract $47,630, I'm going to get $2,370. So we've already paid taxes on this chunk of money right here, this $47,630. That is this one right here. We need to pay taxes on the remainder, and the remainder is $2,370. So that's how I got this number right here. Now this $2,370 we have to pay at a higher tax bracket. So in other words, we're paying at a price of 20.5%. So I take that 20.5%, I put it in its decimal form, and I get 0.205. Again, if you don't know how to do that, you just go 20.5% divided by 100, and that equals 0.205. I multiply that through, and I get 485. So this is also a chunk of money that we need to pay. So therefore, our total income tax is going to be this number right here plus this number right here. So it's going to be $7,144.50 plus $485.85. Our total income tax that goes to the federal government is $7,630. So of the $50,000 we made, okay, we need to give back to the government this chunk of money. Okay, so let's get another practice one right here. If you want, you can put the video on pause, try this one yourself and see if you are correct, and maybe try doing that for a couple of minutes, and then we'll see. So anyways, again, same thing. First $47,000, we pay 15%. This number will always come out to $7,144.50 if we're making over $47,630. So that is our first chunk of money that we have to pay for income tax. Then on the next $47,629, again, we get this number right here. The government gives us this number, and it's right there. We pay at 20.5%. Okay, so since this is a larger percentage right here, it works out that we pay more taxes. So on the first $47,000, we pay $7,144. On the second $47,000, we pay $9,763. So you're paying considerably more. But we still have not reached our $100,000 income. We've only been taxed on the first $95,259. And if you want to know how I got this number right here, you simply just add the first $47,630 plus the second chunk of money, which is $47,629, you get $95,259. Since this number is less than how much we make, okay, we still need to pay taxes on that last $5,000. So, well, it's not quite $5,000, it's $4,741, but we still need to pay tax on that $471. And again, I got this number right here from taking our income, 100,000, minus how much we've been taxed on. So we've been taxed on $95,000. So we need to pay more taxes on that last $4,741. That last $4,741 is taxed at a higher rate of 26%. So I take 26%, I convert it into my decimal form, I multiply it by how much is in that bracket, and I get $1,232.66. Now, to find out how much total income tax I must pay, I take all of the income taxes from all the different brackets. So I first take $7,144.50. I add it to this $9,763. Okay, and then I add that to that $1,232, and I get the final number of $18,141.11. Okay, so a person who makes $100,000 a year has to pay $18,141 in taxes. Now, there's a whole bunch of different things. Like if you have a business, you can have tax deductions, and if you contribute to charities, you can pay less taxes. If you contribute to your RRSPs, you can pay less taxes. There's all these different ways to decrease the amount that you can pay to the government, and most people kind of don't pay this full amount. Okay, so that is something that has to be taken into account. But and so it's a little bit more complex than that. But in 2019, if you didn't have any deductions or like tax breaks or any of that kind of stuff, you'd be paying, if you made $100,000, you'd be paying $18,141.11. Okay, I would like you to practice on the rest of the worksheet on calculating federal tax, and later we will learn about how to calculate provincial tax, and each province does it a little bit differently. So we're going to be looking at a couple of the different provinces, and we'll but mainly focus on ours and probably Alberta, since most people will be working in those two places. Anyways, that's it.